The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading. I am your host, Darrell Martin, right here on TFNN. Don't forget, you can listen to us anywhere on your mobile phone at tfnn.mobi or live on Tiger TV at tfnn.com. And I want to say 8 or maybe even 9 hours now of a live radio, live traders talking to you about the markets. And let's check out where the markets are at right now. We got the S&P is flat on the day. We got the Russell is down 1.4. We got Nasdaq up 22 points, sort of the mover on the day there, and it's been just up down over there on the Nasdaq. But it's been so far it's started off and just ran on up. Looking on over at the Dow, it's up 4 points right now. We got oil is down 68, 69 cents, just had a little bit of a push down there. We got natural gas is currently up almost 3% on the day, at 2.7 right now. We have corn, it's up over 3%. The ags, when nothing else seems to be moving, the ags are rocking along. We got corn up 15 points. We have soybeans up 35 points on the day. Euro dollar is currently up 17 pips with the Aussie dollar down at 65. Pound dollar is currently up 4 pips with dollar CAD up 9. Dollar franc is down 17 pips with euro yen up 50, pound yen up 80 pips, and dollar yen up 40 pips. Gold is currently down 5 points on the day, with silver down about 0.75%, 0.78% right now. And we got copper down almost 1% on the day. That gets you your current market wrap. Let's check out what's going on as far as news this week. Pretty light week. We only have really 5, what I guess you could call tradable, events coming up this week. Not some weeks we have 15 or 20. Some weeks we have, a few. This week we have 5. No major, high impact trade news coming up. Obviously yesterday, today, tomorrow. Wednesday, we're going to have U.S. existing home sales. About 50 pip move on that, on euro dollar. Got Canadian core retail sales. That's about a 60 pip move on the dollar CAD. And the British GDP, the pound GDP coming on out about a 70 pip move usually. So that's the big mover of the week. And then we got Canada core CPI. Also on Friday, we got the U.S. new home sales on Friday. Both of those just a bit over 50 pips. One on dollar CAD, the other one on euro dollar there for new home sales dollar CAD for Canada core CPI. So it's going to be a pretty quiet week as far as the major news goes. What else do we got that you need to be aware of this week? Well, we're going to have the Aussie dollar, 9:30 to 9:30 on their monetary policy meeting minutes. They did decide to lower their interest rates. So are they going to do it again? Are they going to leave it? How's everybody feeling about that? What were they discussing? What led them to finally make that decision, which was the expectation? And, are there any surprises in it? So that's going to come out tonight at 9:30. Be aware of that. That should cause, a little bit of volatility in the markets. But they did what was expected. So it shouldn't be too overwhelmingly wow, how'd that happen? Okay? Then if we roll on into tomorrow, there's really, you got German PPI at 2 a.m. And that causes a little bit of volatility, maybe 20 pips. Beyond that, nothing. Okay? If we go on into Wednesday, like I said, we got the got the U.S. existing home sales. We do have the meeting minutes coming out on Wednesday as well for the FOMC, and so we'll look at that a little more in detail. We'll discuss that more on Tuesday, but no big surprises right now. It's just again the big thing is what clues are coming out about tapering, and is this going to show that the Fed is looking to taper sooner rather than later? And that's what people are really going to be looking for. If it's later, that'll help the market rally. If it's sooner, that's going to, lead to a bit of a sell-off. So, and that's sort of what's been affecting the market here the last couple of weeks or last week or on the decline it's got there. And then let's see what else. China will have its flash manufacturing PMI coming out. That'll cause a little bit of Aussie and yen volatility around 9:45 on Wednesday night. Let's go on. Let's look a little bit deeper. We'll go over at Thursday. On Thursday, you get your German flash manufacturing PMI, your French flash manufacturing PMI. That usually doesn't do anything, but the German usually does have more of an impact. 3:30 on Wednesday, so be aware of that. There'll also be just a series of Euro announcements coming out, so that'll add to some nice, a little bit of volatility there. So that should give us something. Core retail sales coming out on the USD CAD, along with retail sales and unemployment claims, all at 8:30. That was one of the reports I said, looking for about a 50-pip move on the dollar CAD. Then we're going to go on down, look a little, see if anything. We've got natural gas, and then we're going to go into Jackson Hole. So Jackson Hole Symposium, where all the big boys get together. So this is, the big economic symposium in Jackson Hole, Wyoming. So you're going to have, finance ministers and academic, PhD, finance, whatever people. You're going to have big market participants. You're going to have central bankers. It's not a press thing. It would be interesting if it was. Wonder what impact that would have. But it's more of they come out and they speak to the press, and that can, depending on what they say, can definitely have an impact on the market. So just be aware that's happening all day Thursday. Okay, so beware that you want to be aware of that. Okay, and then let's see here. What else do we have? We got it's like Friday, the second estimate GDP, like I said, coming out on the pound. They'll also have their mortgage approvals, their preliminary business investments, and index of services all coming out at 4:30 on Friday. So that will help with the volatility right there on Friday. Then we have the core CPI coming out on the USD CAD at 8:30. And like I said, new home sales, consumer confidence will come out in Europe. That shouldn't be too big of a mover. And then, because it's all over. And then Jackson Hole Symposium, day 2 on Friday. So that's our week. What we're really looking for, is to get to Labor Day. So that's going to be the fun time. That's when the volatility comes back. And so get ready. Get your systems down. Get your risk management in check. And get ready to rock and roll, because you just got 2 weeks and the clock is ticking. And the trade volatility really starts to return. At the same time, be aware of the choppiness. Sort of be ready for that. Be watching for chop over these next couple weeks. Because the markets are more likely just to, sort of be up and down. I mean, I'm more looking at like half deviation up and down days, more than I am just full deviation moves right now in the next couple weeks, especially like on the U.S. indices. Okay? With that, let's go ahead and hop over. Let's see if there is anything with this lack of volatility that we have right now that we might be able to take advantage of, such as over in the silver or gold markets. Now I'll pull up the binary scanner over here, right here, the Diagnostic binary scanner, and we'll check out the next 15 minutes. We'll get put 65 to 95. That's really all we need. You can check in the money, but I'll get rid of everything else, and that just makes it really clean. So that way, the only things I'm looking at are things that I need to focus on, and see if anything potentially comes up. So we do have, let's see, on gold. We can look over at that. We have a potential. I mean, a very close potential. Keeps sort of coming in, going out, right there at 33.66. And I'll pull the chart up, and we'll look at that a little more in detail. Okay, so right over here, pull it up. And let me pull up a time-based chart for you. And 1 second, I'm going to drag it over to the screen. I know it can sometimes take a minute. There we go. Put the gold one on there. Now we're ready. Okay. So pull this off. We'll maximize this chart just so you can see what's going on. And we do have a bit of a downtrend, but it's pushing up right now. So I'm going to hold off on that one. We have about 5 ticks. It's pushing up 4 ticks, so it's really close. Probably not going to hop in that trade just yet, but I'll be aware of it. Okay? And so what do I mean, but I'll be aware of it? Well, I mean, we still have, 15 minutes. So the market could easily start pulling back down a little bit. If it does, then excellent. And then I'll hop in on that. If you are trading crude oil futures like on Nadex, make sure you've rolled on over to October this morning. So you should be on the October futures contract. You should be looking at October charts. Just a side note for you. But this would be the binary. So if we chose to take this one right here, we're starting to get a little bit more room and still some decent price. Right there, so 1366. What this is saying is right here. Let me put that in, and that's like even, there's really no great support resistance on that. But, so 1366, if it expires at or below 1366, then we profit on the trade. Okay? We got the indices sort of moving a little bit down right now, sort of ticking on down. But that would be our trade. That's right around $30, so not bad. Can go in there on that one and put that trade in. I'm just watching it. We're gonna give it a minute. Now understand, as time goes by, especially if this thing stays flat or moves down at all, that binary is going to go way down in value. So, but if it goes up to 1366, we need to be belling on the trade. Okay? So be watching that, be looking at it. Sort of, I'm looking at sort of just the overall trend in the market is down. It was pushing up right there to begin with when we first pulled it up. So I'm like, you know what? This might be a pullback time. I need to give it a second. And, of course, you're always going into the pit close, like if you're doing the 130 expiration. So there can be a little crazy volatility right there. And you just want to, be ready for that. And, have your ticket up, fill it in with, 10, 25, 100, whatever contracts you do. And then you can have your trade on. Put it in. But, again, that's the sell on the 1366 gold contract. So we'll watch that one and see how that turns out. And the thing to always remember, okay, when you're doing these is if it hits your strike, you need to be out. So you can do a variety of things. You could go on here and let's see, like there's like on Ninja, on Thinkorswim, on pretty much every platform, you have some sort of price alert indicator. And you can go in here and you can go down to price alert. You can click new and then put in your price. So you could put like say 1366 and then hit apply. Just sticking that simple thing on there right there, and what it'll do is now there's an alert that you see that blue line now. There's an alert on there. If it does hit 1366, I'll know to exit. So on my trade, I also want to go in there and I want to be ready for an exit on this trade. So I'll go back in and I'll click on what I like to do. Now you can do this in two ways. One is you can do it right here. It's a little more complicated. You click here and you got to change direction. Okay. The other one is you can go just into the scanner itself, okay? And inside the scanner, you can click on the Close It Market button. It'll pop it up for you in the opposite direction automatically, and then you can put in your stop. Now, it's probably going to be right around 50 if it gets to 1366. So I could put in 50, but here's the problem. What if it gets to 50 and then goes a little bit higher, and I miss out, it ends up going into a working order, and I totally miss out on that ability to do that order, that I want to be able to get out at, basically I want to get out. So I'll put like 60 or 65 just to get me out at market, so if it hits it, I can hit the button, I don't have to worry about it. All right, stay right there, folks. We'll be back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
To the Diagnostic Trading Hour. So we're checking it out. We got the gold contract up. We're letting that trade play on out. Just that short 10-minute play I like to try to do every day if I can, if an opportunity presents itself. Again, if an opportunity presents itself. It's like silver's closing on out here in about 20 seconds. So that'll knock that one out. And we didn't have any opportunity on that one, so we didn't take a silver. But we did find one on gold that looked like it might work out, so we're watching it right now. In addition, let's go ahead and look at some other charts while we're waiting. So give me a second here. I'll open up a few things for you, and we'll pull them up here on the charts, and we're just waiting for this thing to play out. So file new. I'll open a new chart on up here, and we'll get it going. All right, so let's check out where some of the markets have been moving. And, we were talking about just the chop that's happening right now. And let's see here. All right. Sorry about that. Takes a minute. Something else to consider that you might want to look at if you get a decent premium. $25, $30, whatever. You might want to look at like exiting at 5. Because a lot of times, we're going for 15 or 20, right? So it gets you out, and if you can get out before that 2-minute warning, that 2-minute, I don't know if you know what I'm talking about, but the 2-minute blackout period where you can't do anything. There's something nice about that. It keeps your heart rate down. You don't have to worry about what happens in the final couple minutes. So, you might want to have like a pending order in to get on out of there, at that price. So I even see some people looking to get out at $10, So just trying to avoid, I have one to get out at 5. So just to, help you have a way to, get out of the trade. Some people will go in, they'll scalp them. They'll go in for they'll sell for 25 and buy it back for, 10 or 15. So, there's a lot of different ways to do the trade. Once you learn it, you start getting a feel for it, and, you can start mixing it up and, I've even done a couple, at the monies and different things like that, just to sort of, see the different possibilities. And I like the at the monies because of the risk reward, but they're really hard to manage. They're more of a, like, you get in at 50, you may want to, like, get out at 25. So, and then how do you get out if it goes against you? Do you get out at 75 or, so it's a lot more, you're playing with it, trying to figure out how to put the pieces together, how to manage the risk, how to manage the profit. This is a little bit more cut and dry, where I just go in, put the strike on, and, if I get a good premium, I get out at 5. If it hits my strike, I get out at, approximately 50. Sometimes I get filled at 45. Sometimes I get filled at 60, So, on the exit, but the majority of the time, the trades work out well. Every once in a while, you just get slapped, and it nails you in the last 2 minutes. If you're worried about that, if it's just too close, okay? Right, this thing is on the line. You can always hop out, like right before that 2-minute warning. Maybe take a $5 or $10 loss, maybe not even take a loss at all, okay? But, don't forget, you do have the choice to exit if you decide you don't like that trade going into that 2-minute warning. And, that's not always a bad choice. Now, you may end up giving up some money, and then you didn't make a profit, so you lost $10, you didn't make 20 or 30. So that's never fun. But it is better than just getting, nailed on a trade. So, so as you're watching the trades, and they'll get close. Like this one right here is going to be a close trade. Just keep those things in mind because there's a lot of, like I said, a lot of little different things you can do. Okay, so with that, let's also go ahead and check out a couple of the other markets. I'll put another one up here while we're waiting. We'll see how that finishes out. And in just a couple minutes, this is one of those ones that raises your heart rate. And but right now, we got the Aussie dollar. It is down a deviation. But right now on the day, just sort of chilling out at that level after first running up overnight to 0.7, hit 0.5, paused, hit 0.7, ran on down to 0.5, 0.7, and then, like I said, right now doing a perfect move. That's actually a great chart. So a nice turnaround, did a slow turn, so gave you time to get in before the big move happened. And then I did a little, hesitation right there, which that'd have been a little, tough to stay in. But if you stayed in it, stayed true with the trend there, moved on down further and hit the 1 deviation mark. Okay. Now, if we go on over, let's check out a couple other markets. We'll pull up the pound dollar. So right over here, we got pound dollar. And that one has moved, looks like basically down about a third of a deviation right there, like 0.3. But then it ran on up to 0.5, down to settlement, back up to 0.5, just sort of bouncing right there on the swing trade. And, just not a lot of volatility in the pound. Aussie, though, had some great movement. So we'll have to be keeping an eye on that and look at it again a little bit more tonight as well for potential trades. All right, we'll stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, going back here to the Diagnostic Trading Hour. Well, the trade did expire in the money. It was very close right there at the end. And we sort of expect them to be a little bit close just because we're going into gold settlement, where gold's closing out for the day. The pits are closing on down. You get last minute volatility. And but we can see right there. Let me pull this up. I'll just show you this over here. But expiration value of 1365.947. At or below 1366, we're profitable. And they may be close. We seem to be pulling them off day after day after day. And unlike in horseshoes, close does count. So, maybe like in horseshoes, whatever, I don't know. But close is what you need, and as long as it's close on the right side of the chart. Let's go ahead and so we got pound dollar there. It's up half a deviation. And we'll go on down. We got euro dollar. Let's check it out. What's the euro doing for us? It ran up, basically to the tick to 0.7, pulled on back. It's been doing a nice little downtrend ever since that all morning long. Did it pretty fast, so you may have missed out on that first part before it turned around, and it had a little choppiness there, but it's just been just sort of slowly edging its way on down. If we go on down, we'll look at, we got the euro there. Let's go ahead and check out the dollar CAD. And on the dollar CAD, we haven't even half a deviation. It's just been quiet. And we'll check out the dollar franc and the dollar yen right after that. That'll wrap up our forex pairs. We've moved down almost right here, down to half a deviation on the dollar franc. Looks like it's dollar's trying to move on down there. And franc is showing a lot of strength compared to the other pairs. We also got the yen showing some strength as well compared to the other pairs out there. And but most of the other ones are sort of tied on that. Aussie dollar would be the weakest one across the board. Well, New Zealand and Aussie are really weak right now. But anyway, but yeah, yen is showing some major strength compared to the dollar. It's starting to really pick up steam. We're seeing it pull on back from 0.7, broke through 0.5, and it is going on home to settlement. That's what it's shooting for right now. But we got weakness in. Also, you can check out the Aussie yen. So let's go ahead and take a look at that. So for you FX traders out there, right there we got the Aussie yen. You can see this is that nice big move right there since 6 a.m. How it's really been moving. And there's a lot of different pairs you can pull up. We can also pull up the New Zealand dollar. Let's see here. And I got, again, a nice trend on that one as well. So New Zealand weak, Aussie weak, Canadian a little bit weak, but not as much. We got the franc is the strongest across the board. And then we got sort of a medium strength on dollar, medium strength on euro, pound, and yen. So that gives you sort of your forex market wrap for the day. Let's go ahead and check out over here. We'll go ahead and look at the oil futures. Like I said, we're over on to the October contract. They moved on down to 0.5, ran back up to settlement, right back down to 0.5. Remember, we're in choppy market territory. Okay, that's the season right now, and so it's staying right. It's just bouncing. It's swing trading. Okay, between the deviations there. And let's go ahead and check out. So we got Knox Oil out for us. We'll go ahead and look over at gold. And we were looking at gold earlier. Let's check out silver. We'll knock that one out. Get our metals out of the way for the day. And silver gave us it gave us a deviation. It moved up half a deviation, came back down to settlement, and then down to 1, back up to half, back up to settlement, back down to half a deviation, and just really swing chop. What you call swing, call it chop. You just got to figure out which one you want to look at it as. But that's where you really start loving these deviation levels, because they start becoming areas of support and resistance for you that you really start paying attention to. And beyond the trailing stops, taking it to sort of another level, looking at that. Let's go ahead and check out copper. On copper over here, we can go ahead and see where we moved on down to 1 deviation. Just a nice trend. It's sort of going all night on down. But in the morning, did a pull back half a deviation, and then just quickly reverse course, went right back down to 1. And then it's just sort of been chopped ever since. It's about 12 o'clock, pretty much right around when it closes down like at 1 there. So it's done for the day. But so nice move there on copper. And did its expectation. It's 1. That's what we're going for, 1 deviation. And why are these things so spot on? Simply because they're based on implied volatility. They're based on option pricing models. And so let's see, what do we got here? We got let's check out the S&P and move on up. Couldn't even quite get to the half deviation. We've been seeing a big sell-off on the broad market, but that really hasn't seemed to be reflective overall of just the total market itself. It's been just a really interesting day. We started off in negative territory over here on the broad market. Let me zoom in on it for you on today's, because you don't really have to look at yesterday's there. And we'll back this thing on down. There we go. And so what you can see right here, it started off in negative territory, sort of stayed in negative territory. So we have a tendency to the downside. That's about all you got. But it basically was chop. And here's your chop warning. If you want a very simple chop warning for you on indices, in addition to looking at implied volatility, chop warnings, things like that. But just look at how it's like closing below, above, below, above, below, above, below, above, like just the 8-period moving average. And just constant. There's really, you can't even, tell me the direction. You can't. So if you're looking, if you're really zoomed in on this thing, which is what you're, every morning you're zoomed in, right? Because you're seeing just today. And so right there, if you're looking just like at this area right here, you can't pick a trend. Well, if you can't pick a trend, then don't pick a trade, unless you're taking advantage of lack thereof a trend, or focus on premium collection or something like that. Just be very aware when you see something like that. You should be expecting some chop. And finally, we start getting a little bit of a sell-off. It's slow, though. This is not a fast decline, as big as it looks. But I mean, it's sort of just selling off there. Now this right here, that was a sell-off. This has just sort of been this nice, slow, steady, taking its time. And like I said, I'm a little shocked we haven't really seen a lot more downward action. But big thing is this morning right here, this chop craziness. So like right here, we opened up, and then we had the big sell-off. Here, I mean, it was just straight down, had a little bit of a pullback. This day, look at this. You got just sort of from craziness and a little bit, and then chop in the rest of the afternoon. So you can sort of start seeing the chop in the market if you start looking at the broad market, because it's all the stocks in your stock exchange, net shares. How many are up for the day minus how many are down for the day. And it's something I really don't like to fight when I'm trading an indice. Okay? So you see that thing going in chop and going down, then you're probably going to want to be focusing on the downward trades. And I use indicators more as a way of when to step aside, maybe a little bit of confirmation, but more than anything, when to step aside than I do more for timing. But, I mean, if you look at this, you got all this, I mean, look at that, chop right there. And that you were confirming it on the choppy market warning, because you're trying to read, like, okay, is this thing going up? Is this thing going down? It's like, look at the broad market. It ain't going anywhere. And when it does finally start moving, then you can get going. So when do you get notice? Okay, so let's take it to the application side of things. When do you get notice here on the broad market index? And let's see. So you're waiting really for this thing just to consistently start closing down right over here. You see how you're still getting these big up-down swings? Say right about here. It didn't until about 11 o'clock, which really isn't the best time to start trading. But it didn't until about 11 o'clock that you really start seeing, a trend. And then it started speeding up a little bit later. Right there for you. But so you go back over and go, okay, well, what do I see over here at 11 o'clock? And this is what's sort of cool. At 11 o'clock, you actually start seeing, hey, you know what? Start paying attention, because the market should start going down. And you got some nice notice before that big move really started happening. I mean, it's big, 4 or 5 points, before that big move started happening around noon. So you had about an hour advance notice on the chart. We can go over here. Let's look at the NASDAQ. Now, NASDAQ was a little bit interesting creature this morning, but we'll check it out. It had a little bit of a move on it, right? Moved on up to 0.5, moved on up to 0.7. About 11 o'clock, it started turning back down right when the choppy started turning down. It's been pulling on back and didn't quite reach its one deviation markup at 3104. It's sitting right there at half a deviation right now and trying to decide if it can really break lower. If it does, we could see some gap fills going on right on down to 30.69.75 right there. So we'll see if it really can break it. But usually most gap fills have already filled by this time of day. The only exception I'd say is when you got choppy markets, you have stuff like what happened on Friday, where the markets just went nuts at the end. And so just be prepared. This isn't a Friday, but it is, that time of the year. And so let's look at the Dow over here. I mean, see like these massive, you got to move from like 50.24 up to 50.90, down to 50.30. I mean, to 60-point swings, all like in the last hour there. Just insane moves right there on the Dow itself last Friday. It's moving on down now, and you can see we had that run up right till about 10, and then it sort of did a little bit of a bounce, and we got that warning over on the broad market index about 11. It said, hey, market's starting to go short now. And then all of a sudden it turned over and went south and gave us just a great confirmation to a short Dow trade at 11 a.m. And if we go in here, we'll look on at, let's check out corn, put our ags. And like I said, got a nice move in corn. Look at this thing. Now, the issue is it then gapped, okay? So as beautiful as that 2 deviation move looks, you didn't get half of it, okay? Literally, like it gapped a deviation on its own. Obviously, a bit of a bullish thing that coming over from the ag reports on Friday opened up much higher. And but you still got, now this morning, when it was trying to trade, you got a little craziness right on the open. Be careful on that. You can see that big bar. But remember, if it's things bullish, it's already above 1 deviation. It's like flying down, flying up. And this would have been a little bit of a hard trade to get into unless you're trading something with, defined risk on it. But this was a great trade. This move from 1.5 to 2 was just, that was a beautiful, nice, easy 5-point trade right there over on corn. We can also look over at soybeans. And on soybeans, it didn't gap as far. Gapped up almost 1, about 0.7 deviation, ran up to 1.5. Pulled back down half a deviation overnight, and then just did a great turnaround right here. You got this turnaround going on. Does a nice uptrend for you. Lets you capture a good chunk of that uptrend on the way back up. It's actually past 2 deviations right now. And who knows, maybe it'll look for 3. I don't know if it's going to make it that far, but 3 will be up to 13.11, and it could make it. A lot of times when nothing else is moving, you're missing out if you're not checking out the ags. And, you know, they are a little crazy to trade, so you better be demo trading them, okay? You could do them on the futures market, but you also could do them on the mini contracts. A lot of people don't even think about it. Yeah, they're not as liquid, but they're also not as, you know, painful. But you're going for like $1 a tick, okay? And they're ticking in 0.1. You know, even when I trade, sort of a, I don't know, if it's a trade secret or just something I've learned, is if I'm trading like a mini oil or a mini corn or a mini soybean or whatever, I usually, even though technically I guess I should be looking at the mini chart, I look at the full size contract. It's a more liquid contract. The chart's going to be cleaner. The tick sizes, you know, I'm used to them. I'll look at like the full soybean contract, the full corn contract, or the full oil futures contract. And then you can just use the DOM, you know, for trading the mini contract. So that can drastically lower your risk on corn and soybeans. And you can trade them on the minis. You could also trade them over on Nadex. So, you know, that's a way if you want to lower your risk to $1 a tick, mini corn, mini soybeans, or Nadex spreads. And just be aware that the one issue you're going to have with minis, you know, with really ags in general, you know, they're wider. They're wider bid-ask spreads, especially, you know, like on Nadex or mini contracts. So just be aware, just due to lower liquidity, bid-ask spread is wider. So that's sort of the downfall. The upside is you don't have as much risk on the contract when you're doing the mini, you know, contracts and things like that. But they're a great way if you're wanting to get into ags. Like Nadex is a very good way because it's defined risk. Also, the mini futures is a good way on the ags because you can go in, like I said, at $1 a tick, and you're not going to get killed if the thing goes 20 ticks against you. If it moves 10 ticks against you, you know, I mean, it's $100. So if it moves 100 ticks or 10 points, so it's not going to just wipe you out, you know, unless you, I guess, have a very small account or do way too many contracts. But it's a great way to learn. And, you know, obviously the best way is first demo, but then once you're moving to live, you gradually get in there, get your live, you know, real money thing in check, your reality, your risk management, and then you can, you know, tier up from there. All right, so that covers our ags for us, but definitely start checking those out if you haven't been playing with them yet. A lot of people totally ignore the ags, and they don't understand that, you know, they have some great clean moves. And I look at pretty small time frames on them too, because I realize that we have a very short time. Like right here, I have a 10-minute chart up. I'd be looking at, you know, a much smaller chart, so I could have more advantage to take, you know, advantage of the moves. Like if I'm looking at a custom bar, like a diagnostic bar type or something, I'd be looking at like 3-tick charts just to be able to take advantage of that. We can go ahead. We knocked out our energies. We knocked out our ags. We knocked out our metals. We knocked out our indices. And we knocked out our FX pairs. So that pretty much wraps up the major markets that I like to cover each and every day. We had a nice gold future trade, and we have the news trades. We got that plan for the week, sort of what to look out for, what's coming up. And we'll be right back, and I go to last couple things for you right after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, I'm going to go ahead and introduce a concept to you, just to get your mind thinking about some potential possibilities of ways to trade Nadex binaries. And I've taught this to some traders already, but right over here, we'll go in and let's say we're going to pick a market that we think is going to, rise, okay? So let's go and I'll randomly, we'll just pick Aussie dollar, okay? And I'll get rid of all the filters over here. I'll make it like, say, 5 to 95. And then say I just want stuff that's going to expire in the next, we'll say, 24 hours. And I'll say I want to buy. So 5 to 95 buy. And then, 1 day. Both. I'm not using out the money or in the money. It's both. Okay? And what I do is I go down here and I can look and I can see what possibilities exist. And I call this the double binary strategy. And it's pretty simple. It's basically using one binary to pay for another one. Okay? So if the trade stays flat, you basically break even. If it moves up some and you're able to take some profit on one of the trades, then, great. And, or you may even make more. If it goes against you and comes back, you could actually still profit as well. Unlike if you just did trend trading premium collection. So let's say you did the 3 o'clock Aussie dollar, and you could go in and you could collect, right around, as an example, 91.14. Okay, you can buy that for $82.50. And if you did that, you'd make $17.50 as long as the Aussie dollar stayed greater than 91.14. I'm not saying to do this now, we're pretty late in the day, but more of an earlier in the day, you have a directional bias. And then you could also go in and say buy the 91.34 for $22. So you basically lose, we'll just make it easy. We'll say 80 and 20 just to make for the math. So if you bought one for 80, you'd make $20 if it stayed above that price. Doesn't have to do if it stays flat, goes up, goes down, but not below the price that you bought, the 91.14, then you'd make $20. If you bought the 91.34, which to say for 20, then like it's at 20 right now and the other one's at 80, so it's actually possible. So if it stayed flat, didn't move up, went down against you, the most you'd lose is 20. So you'd make 20, lose 20 if the market just stayed flat and did nothing. Okay? But let's say the market takes off. Well, you can still make your 20 on the 91.14, plus you could make as much as 80 on the 91.34. So the most you'd be risking would be $80 on the in the money and $20 on the out of money, and you can make actually $100. So risk reward is 1-to-1 on a max ratio. To better improve that, if the 80 got down at that strike, if the Aussie dollar got down to your $80 bought binary, the 91.14 strike, you could buy back at 50. So that limits your risk to, just $30 on that, 20 on the other side. You have a risk of 50 with a max potential of 100. Okay? So let's say it goes down, it hits the 91.14, but then the thing turns around on you and goes back up. That couldn't possibly happen in a choppy market, could it, right? So it goes down, hits you, it goes back in your direction. Well, if it goes back up over that 91.34, if it gets to 91.34, you could get out at 50 and you'd be break even on the trade. Or you could hold on to it and you could actually make $80. So $30 would go towards the loss you took on the 91.14, and then you'd keep $50. You'd actually still make $50 on the trade. So if it expired above that. Something else you can do is the one that you buy at 80, you could sell at 95. So let's say it's going deeper in the money. You could close that one out. And so you capture that profit. Now you've completely reduced your risk down to like $5 net on the trade if it just drops back down. But if it takes off, then you have nothing to worry about and you have a lot of profit potential. So anyways, I call that the double binary. It's buying one in the money to pay for one out of the money. And there's a lot of ways to combine that together. And I just want to throw that out there to get your mind working for those of you who are starting to trade these binaries. Y'all have a great day, and I will see you tomorrow. Stay tuned. We have another great show coming up for you right after this.